Inflation and geopolitics are back in focus. A busy week of U.S. economic data combined with ongoing Middle East uncertainty could keep market volatility elevated. This is the week ahead at XM. Let's take a look at what's coming up. On Monday, the Bank of Japan will release its summary of opinions, with traders watching for clues on the pace of future rate hikes. With the BoJ now focused on whether wage growth can keep inflation stable, a hawkish message could support expectations for further rate hikes and support the yen. On Tuesday, the Reserve Bank of Australia is expected to keep rates unchanged following the soft inflation data for the second quarter. Traders will focus on the bank's guidance, with a hawkish tone potentially lifting the Australian dollar. Attention turns to US CPI data for July on Wednesday. With inflation cooling in June but still above the Fed's target, markets will be watching for signs that price pressures are continuing to ease. Stronger than expected data due to the re-escalation in the Middle East in July and the rebound in oil prices could help lift the US dollar, particularly after Fed Chair Warsh's July comments kept the possibility of a hike on the table. The UK will release its latest GDP figures for the second quarter on Thursday. While growth was strong in the first quarter, momentum may have slowed in the second quarter as higher fuel prices linked to the Iran war likely put pressure on economic activity. The pound may be sensitive to any upside or downside surprise in the data, especially as the Bank of England's rate path is still uncertain. Later on Thursday, the focus returns to the U.S. with the Producer Price Index. June's PPI report showed that producer prices were mixed, indicating underlying price pressures. If July's data shows that factory price pressures are easing, it could weaken the case for further Fed rate hikes, supporting risk appetite while pressuring the U.S. dollar. And on Friday, all eyes will be on U.S. retail sales for July. Following June's decline in consumer spending, another weak reading could indicate that higher gasoline prices are weighing on household demand, also potentially reducing Fed rate hike bets. Beyond the economic calendar, investors will also keep an eye on ongoing uncertainty in the Middle East, with oil likely to remain sensitive to any further escalation. Gold will also be in focus. More headlines pointing to peace in the Middle East, combined with a softer than expected inflation report, could further weaken the case of a September Fed hike and thereby allow more advances in the precious metal. This was your week ahead at XM. Don't forget to subscribe. You don't want to miss a market update.